Good afternoon. We're just letting the final people in, so few of you arriving, lots of people trying to get on today. But first of all, thank you for attending. My name is Robert Kelly from Stewart Title, and welcome to the March Residential Property Forum. As always, we have Ian Quayle here to lead the session. And You'll be crowing with joy, Ian, because you've been saying Commonhold was coming back since they lost it last time, and now you've finally been proved right.
Well, it's a first, isn't it? It's a first, and yeah, there'll be lots of fun and games with regard to Commonhold, Robert. I can tell you that for nothing. But yeah, it looks as if we're going to go live again. Whether or not we're going to see the resounding, dismal failure that we saw last time, who knows? Hopefully not. But yeah, you're right.
But yeah, and we will. I think you'll mention later. We will be doing some sessions on that later in the year, as and when proposals start coming out. But today, as well as Ian talking, very grateful to have Robert Stevens and Eppie Pearce from Nationwide coming to join us to talk to you. I met them at a conference at the end of last year, and they were very interested in the idea of getting out and talking to conveyancers to explain Nationwide's way of dealing with these issues, and also just to hear your feelings. So very grateful, and thank you both for attending today. I think it is really essential that this dialogue between lenders and lawyers takes place. We all have the same end in mind, and quite often I don't think there is enough dialogue. And of course, sometimes, given the pressure of transactions, it's difficult to actually take the time to understand people's issues. So hopefully today will be a proper forum in that way for people to talk to you. So with that in mind, we have some questions already, which I know Ian has, but I know also that Robert and Eppie want to talk about some issues. So I will keep quiet. And Ian, if you want to start.
Thanks very much, Robert. Thank you. Yes, and good afternoon to everyone. I hope you can hear me and see the slides, etc. I'm delighted that Robert and Eppie from Nationwide have come along today. And Robert Kelly was mentioning there, I look at LinkedIn probably far more than I ought to, really. And often you see sort of criticisms about the conveyancing process and about, estate agents doing this or not doing that, and etc., etc. So any opportunity I have to allow vital sort of components of the conveyancing process to meet and talk, I think is fantastic, and I will encourage it, as often as I can, because whilst people are talking, getting to see what the other side's perspective is, or the collaborator with us on a conveyancing project, if we're acting on behalf of a purchaser, for example, is the better it is. So I'm really pleased that Robert and Eppie are going to start this afternoon by explaining some of the things that they're dealing with at the moment. So Robert, I think if you could take the lead for me. Good afternoon to you. Thank you for coming along. And I think there's some things that you want to share with the attendees today that I think will be really useful for you to share.
Okay, thank you. So firstly, appreciate the invite from yourself and from Robert. And yeah, I thought it was kind of timely for us to join today, given the fact we're all unfortunately working towards a stamp duty deadline, which is coming up, and the pressures that's going to put on all of us within the industry, no matter which part of the chain you work up in. So I guess the big challenge we're already starting to see is kind of the number of cases coming through, the escalations, and we're ensuring we're ramping up our staffing levels to try and deal with those as best as we can. I suppose one of the things I just wanted to touch upon, I guess one of the challenges we're already starting to see is I guess the number of cases where we're seeing the issues raised very much at the 11th hour, the cases where we're seeing the COT come in and a long list of problems and the challenges that then creates for us as we kind of move through. And although, say, we sit here on the 10th of March, I'm well aware we've still got a few weeks to solve cases. I guess the big challenge is going to be those cases where we get a COT in the last week of the month, with a couple of days to go, and we've got all those issues that are kind of in front of us, and the challenges that's going to face for us. So it's a question of sort of obviously not just sort of flagging that out as an issue, but talking about, or how do we work together to try and resolve those issues, and I guess the plea is if people can give us as much warning as possible around them, especially when we've got to take further onward action, whether it be having a further conversation with one of our valuers, or actually then having to request further information from other specialists. From a reporting standpoint, I think the challenge is sometimes there's an expectation that these issues can just be solved with an indemnity policy, and a lot of times when we actually see them, the problem is that they either can't be, they potentially impact value, impact use of the property, or the indemnity policies don't always necessarily cover the issues raised. So these are the sort of things that I'm calling out and just wanted to sort of highlight in the opener before we just talk a little bit about the nationwide processes. I don't know if you wanted to dovetail or add anything onto that, given your team pick up a lot of these queries directly as well.
Yeah, absolutely. And I think every attempt and process update and communication that we have with conveyancers, although I think there's obviously a lot of different opinions, it's always there to try and improve the communication between the lender and the conveyancer from our side. If a conveyancer provides us with the information and that enables us to make a decision quicker, that is just a benefit to everyone. So we're very much kind of on a bit of a tirade in a positive sense, really, to make sure that the communication does improve, and we want to help all conveyancers to get the right outcome the quickest we can. Whether that be an indemnity or whether it not be an indemnity, fundamentally. So we're really keen to improve that, line of communication between us and the lender, us and the conveyancer, apologies. So, and this is obviously part of it, getting out there, talking to people, and letting people understand and get an insight into our processes. So we're excited to hopefully shed some light on how we work today to everyone on this call.
Brilliant. Yeah, and I think from our perspective, we've been on a journey trying to make our UK Finance Handbook as comprehensive as possible. One of the things I always like to call out to people is at the moment we are limited on handbook. It's not always common knowledge, people. So we are limited on how much we can write in various sections, and there are some sections that don't have part twos, so we can't add new part two. So sometimes we have to put bits of where it might not seem counterintuitive. So people might say, why have you not put it as response to this question? Well, there isn't a part two response for that, so we can't write anything, so we have to put it elsewhere. So there are some challenges that we face today regarding communication, and there's a project ongoing at the moment regarding sort of updating the handbook, which I think will help on that. But for us, it's kind of, we want to be as clear as possible around what we do and don't want to know. And I guess the key thing when it comes to is the ask of us is, when you're writing in with an issue, do we have all the facts to be able to make a decision, and the recommendations, etc., because especially when we're going to be under very tight turnaround times as we move into the stamp duty piece, we don't really want to have the time to have to go back and ask, can you give us a bit more information about this so we can make a decision? It's kind of, we need as much as we possibly can.
Yeah,
I think that probably just dovetails into a very brief bit I'll touch on. So for a long period of time at Nationwide, we've kind of done as much as we can to collect as much information about the property as we can up front. So we collect data at the point of mortgage application ourselves. So there are some key things that we can make decisions around. So we do collect title information. So obviously we do AVMs, we get valuation reports, we also get environmental data, etc. So there's a lot that we collect where we can to try and filter out cases where we know we're not going to lend, so they don't ever reach you as a conveyancer, because actually if we know there's a significant problem with it, it's not going to meet our lending policy, we will have declined it before it gets to that point. So there's a lot of work we've been doing over the last decade to try and help that process and smooth out some of the edges.
And I think that's really, in terms of kind of thinking about strategy over the next couple of years as well, I think what Rob's just described there is going to be quite a fundamental improvement over the next couple of years of being able to share information with conveyancers better than we currently do. So obviously Rob's touched on where we hopefully were able to tell people up front where it might not necessarily be suitable, but where we know something, we can tell you guys or a conveyancer, actually we do know this, you do not need to report to us. Now one of those is gifted deposits, which I appreciate everybody that I ever speak to in the conveyancing world always talks to me about gifted deposits and the fact that we already know that. So we're working heavily to try and enable better information sharing, and with better information sharing means that hopefully some of those queries that we get back and forth on so many cases causing us all a lot of time and a lot of effort to resolve, we can tell you up front already that we know we're happy and you can carry on with your work as you would normally. So I definitely see that being a priority over the next 12 to 24 months really in the lending space and the conveyancing space. And just touching on also the UK Finance Handbook, Rob and I have been kind of heavily involved in that. It's something, I think the handbook has been something that all lenders share frustrations with, probably all for slightly different reasons. We all use it in slightly different ways, but there has been a painstaking process to rewrite line for line the UK Finance Handbook, and that's being worked through now. And I really hope that will have some huge benefits for the home buying and selling process, particularly when it comes to the conveyancing point in the near future. So hopefully some of the frustrations that we're seeing now, we're working some really good steps towards resolving those.
Thank you for that. Yes.
Do we touch on the questions?
Yeah, happy to do that. Thanks very much. So Robert, Ebby, that was really useful. There's a question I had really, it's a general question about technology. And I don't want to sort of spare your blushes, but I do know from speaking to the Land Registry, how collaborative you are with the Land Registry about the use of technology. And I think, Robert, you hinted on something there about your ability to obtain data from the Land Registry at the point of application, which is really useful. And if you could share with us where you think technology takes you as a lender and how that could impact on the work of conveyancers. So things like electronic signatures for mortgage deeds, more work involving the Land Registry, more collaboration with the legal profession, and how technology fits. Robert, any comments, or Epi, any sort of things that might be of interest, or things that are on the horizon, as it were?
No, I'm happy to talk about that. So yeah, we've been working with the Land Registry on a number of, different ventures over the last decade. I think you have to be very careful when talking around technology. That technology is the sort of the silver bullet that solves everything. I think technology helps, but again, it's one small part of solving all of the issues. And I see that very much when it comes to electronic signatures and other things. They serve a benefit, but it doesn't solve everything. I think from our perspective, a good example being the local land charges project. So that's something we've been working on for a long period of time. And where I see the benefit of that is, one, us being able to get data we can feed into our decisioning. So, for example, if there's anything that's a red flag to us from a land charges perspective, we could pull that out at the beginning of the process. But also it's around removing assumptions. So a valuer may go to a property and they'll make a number of assumptions. Ultimately, those assumptions will then feed through into a valuation report that's then confirmed by a conveyancer months down the line. If we've got that information and we can provide it to the valuer, then the valuer doesn't need to make an assumption. And ultimately, if we can tell the conveyancer, then the conveyancer doesn't need to worry about it either. So you can kind of streamline that journey. And a good example I would take by that is sort of planning commissions. So the valuer goes to a property and they go, there's a ground floor rear extension.
Yeah.
If we've already know that there was planning permission for a ground floor rear extension, you can tell the valuer that before they go to the property. Yeah. And then they haven't got to assume there was planning permission. Yeah. You can you start to join the dots on the data. Yeah. So you may still need a conversation, but it's a different conversation. Yes. And it's based around actual facts as opposed to potential just assumptions.
Yeah. Yeah.
And that then links very heavily down the indemnity insurance route, isn't it? We have the ability of knowing that up front on something that might be covered with an indemnity later on down the line. And actually that when we talk about information sharing, if we can tell the conveyancer that we know that already, and we know it's been taken into account in the valuation, we can tell you either these are the steps that we need a conveyancer to take to mitigate that problem, or we're quite comfortable that an indemnity is put into place if the indemnity covers X, Y, and Z. You don't then need to, as a conveyancer, write into the lender to say, are you happy with this indemnity? No, can you change this bit? Yes, happy with it. We're potentially saving 3 to 4 weeks of communication between the lender and the conveyancer by just doing that small change and getting that information up front. Because I think there's quite a difference in not understanding in a negative perspective, but as a conveyancer, it's not your job to understand the nuances of lender valuation processes. That's just not fundamentally what your job is, and we can't expect you to. So therefore, we need to let you know what we already know. Have we done a digital valuation, so like what's called an AVM, so no one's actually visited the property, so you can't assume a valuer has seen this problem? Well, then you might need to report to us in a slightly different way to if you reported to us if there was a full physical valuation was done. And so, you know, again, that document, that information sharing is going to be so fundamental in giving conveyancers the confidence and I guess the information to know what, as a lender, what's important to us and what we've already seen. And just touching on the local land charge piece, as a comment in the chat, yes, it absolutely hasn't been fully migrated. I'm not quite sure what migrated properly means. There are obviously some local authorities that haven't been migrated at all, and in that situation we can't do what we haven't got. So I think we're in the early stages of kind of working through as a lender how we would deal with that situation. It's probably, again, information sharing to a conveyancer. By the way, we haven't done a local land search local land search on this because it's not a migrated authority, etc. In terms of the accuracy or the I guess there's the actual physical digital charge registration on the LLC piece, we are doing our absolute best to address match, what fundamentally means that we are overlaying our own accuracy overlay on the local land charge data, so using technology in-house to be able to do that, only ever relying on it when we are very confident about it. So when we use technology and when we talk about technology at Nationwide, it's always very much the most conservative way we can to make sure it's absolutely accurate as best as we can. And then to be very open to people saying, actually, are you using this in the best way we can? And talking to Land Registry and talking to all of our data suppliers to say, how can we make this better? How can we make this more accurate? So with every data set, we have to understand that there's going to be shortcomings. With every technology change, there's going to be shortcomings that we can work through. LLCs, even though it's been on the agenda and on the cards for several years, I think it's 2016 might be that this process was started. We're working, and the reason it's taken this long really to get to a position where a lender can use it is because we want to be 100% in the outputs that we're making lending decisions on, which I think actually really links into so many of the questions that's been asked ahead of time, in terms of we as a lender, we have to make sure we protect not just our investment, but as a mutual in Nationwide have to protect the customer's investment in that home as well as best as we can. So all of these different technological advances go through so many overlays of accuracy and rule sets to make sure that we're not taking unnecessary risks where we don't have to.
Got you. Thanks for that, Epi. And I mean, looking at Zara's point in the chat there, of course, as far as the Land Registry is concerned, it will indemnify in connection with errors that are on the register or not on the register. And of course, the Land Registry is the primary source of indemnity for the conveyancer, and it will seek to recoup, if assuming that the local land charge department has made an error, the Land Registry will recover from them. But great questions, Zara. Before we start looking at some questions that have been put to us, knowing that you are attending today, both of you, one last question from me. You may or may not be aware that my sort of pet subject is the Building Safety Act. And on my travels up and down the countryside, I'm amazed at how few firms are willing to take on transactions that are BSA related. And I was interested to know, from your perspective, whether or not you're seeing more firms that are prepared to take on BSA related work. So are you seeing, as the government would hope, conveyancers, solicitors, etc., being willing to do BSA related transactions? And secondly, any sort of hot tips or handy hints for practitioners from a lending perspective with regard to BSA matters? So, for example, I'm assuming you wouldn't ask me as a conveyancer or a solicitor to verify height of buildings or anything of that nature. But so we can park all of that sort of stuff. But if either of you have got any sort of useful hints for firms that are taking on the work, that would be really interesting.
Yeah, don't know if we've got the time.
Yeah,
sorry.
I was about to say,
yeah.
Probably do
here for a month.
We could do a whole separate
for us too.
a whole separate session on this. And that, what I would say is a couple of things. Firstly, we are working on the assumption more firms are taking this work on, because we had a period of time a year or so ago where customers were struggling to find people.
Yeah,
we're not getting that same pushback from customers now. So customers seem to be able to find people who are able to do the work. So it's not being thrown to us as a significant challenge. That seems positive. What I would say when it comes to tips, again, we have probably a slightly different process. So I will briefly, because I could do an hour on this topic at least, talk you through what we do. So for all flats, we will send a chartered surveyor out to the property. Yeah. We will get them to report to us. I'm talking England and Wales here. I'm not kind of.
Yes.
I'm not going to go into the Scottish process and the Northern Irish process, and because I'm not sure who the audience here are.
Yeah, English and Wales, Robert. Yeah.
Yeah, just checking before. I didn't want to offend anybody by not talking about the other processes, because unfortunately we do have multiple. So we're in a situation where we ask the surveyor to then report back to us in relation to are there concerns regarding building safety. Yeah. That then triggers an internal process where, depending upon the height of the building and what the value has highlighted, we will then go out to the mortgage broker or whoever's making the application, and we will request various pieces of information. Right. Now, they could be an EWS1 form, that could be an FRA EW, that could be a leaseholder certificate, that could be a freeholder certificate, that could be confirmation of remediation under the Building Safety Act, or potentially the developer pledge. We will assess all of that documentation, and we will be comfortable around interim safety measures, costings, etc., all before a case goes to offer. Brilliant. So you will not get a case from us until it's been through that quite lengthy process where we will have reviewed. When we then go to offer, if it is a building safety case that we want you to do something with, we will specifically write to you and confirm that. And Epi, I don't know if you want to touch, because your team send that correspondence out, but it's not just a blanket broad brush approach. It's quite unique to each case of what we're asking for.
Yeah, we were very clear back in 2022 when we had to come up with a process here and to support these leaseholders that we did not want to rely on, and that's not any disrespect to the conveyancers, but did not want to rely on conveyancers to essentially count on Google Street View how many windows this has in the vertical. That's not. That's fundamentally not where we're at as a lender in this space. We have very comprehensive instructions in our UK Finance Handbook in the Relevant Building Safety Act section. We have done a lot of engagement work with solicitors on this. So I totally agree with what Rob just mentioned in terms of we are not seeing the noise and the frustration with our customers about being unable to find solicitors to act on their purchase, remortgage, whatever it may be, on a building safety impacted property. That's just, they used to come into my mailbox hourly. That that has not been a thing for probably about 18 months for us now. Brilliant. Which is fantastic. Good. I think the trigger point was the Law Society guidance that came out. We saw an absolute watershed moment then. It was, I think it was brilliant. It really did, I think, hopefully, well, we saw anyway, others, obviously people will have slightly different views on this, but we saw a confidence building exercise there in conveyancers being able to take on. We did, as I said, speak to a lot of conveyancers, really trying to get to the grips with what was the concern, because as Rob said, when we were giving a lot of the information, we didn't quite understand what the reticence was. And to be totally frank and honest, the response that we got back from that was, well, we just probably didn't read the UK Finance Handbook as well as we probably could have done. And now you've explained it, we get it, and we understand it. That's not to say, though, that I understand. We didn't not understand their concerns, because we also did echo the sentiment that actually it wasn't up to the conveyancer to detail where it was impacted. We have put a piece in around the LPE1, and if there's other documents that come through with the LPE1. So for example, if we don't tell you that it's a building safety impact case, but you get a leaseholder certificate under questions, I think 18 and 19 of the LPE1, which provides other documentation, then that's probably a slightly different conversation. You need to let us know about that, which we've put into our handbook, and we can then investigate accordingly. And that actually just brought out the fact that a lot of freeholders and leaseholders were just doing them even when they didn't need to do one. So it's been an education piece for us there, so we can help our customers understand where they do and where they don't need to do one too. So it's been a huge journey for us as a lender to be able to get to the position where we have a policy, I think, a lending policy and a process that works as best as we can. I'm not going to say it's everybody's massively happy with it in terms of the conveyancing world, because I don't think you're going to be ever in a position where you can everyone's going to love it. But we've got to a position where we are at a really comfortable view that our customers are getting the advice that they need when they're either buying or remortgaging this type of property.
And I think this was the key thing for us. It was around making sure, from a legal perspective, customers buying a property that were impacted by building safety issues fully understood their legal responsibilities and potential liabilities around what fund it was covered by, and what the Act did or didn't do. And I think that's key, because ultimately that may not have been explained to them up until this point.
It's a fair comment.
Can I just touch on Zara's put another great question in the chat. I totally echo the first part of that question, which is around EWS1s in sentiment. I think it's probably worth us calling out that we are in a period of flux in this area at the moment after some of the recent, which I'm sure everybody on this call will be aware of, issues with the Tri-Fire scenario. I think the best that we can probably offer in this space right now is we are in constant engagement with UK Finance and constant engagement with MHCLG. We have a call with both of those parties later on this afternoon to talk about this again around EWS1s. We have to acknowledge that EWS1s are not enshrined in any legislation, whereas FRAEWs are. And so we acknowledge that difference. But as I said, it's a very fast-moving area right now that I don't think we can commit to a long-term view on in terms of using it for lending. The only thing I would say is a lot of the EWS1s now are coming up for expiry dates, having them been obviously 5 years expiry period. We are using this as an opportunity to re-review our policy on EWS1s more generally, also in line with the Tri-Fire issues that we saw. And I think you'll start seeing some lender policy, whether that be from a trade perspective with UK Finance or individual lender policy coming out on this in the next 6 months, I would say. I think there'll be some movement there. So I know and I appreciate that that's not a direct answer, but I think it's worth acknowledging that this is an ongoing conversation. Yes, hopefully that helps somewhat.
It does, Epi. That's fantastic. Thank you. Okay, sorry for throwing in the BSA, but as I say, everyone always expects me to throw someone about the BSA because it's my pet subject. Anyway, some questions. Why are Nationwide not insisting that retentions be made on new builds? Is that something either of you'd like to take on and have a look at and explore?
So it's something we have looked at previously. So people may or may not remember that Persimmon actually did a sort of a new build retention scheme and system a while back. So it's something that we did sign up to and we have dealt with previously. I think it's a question of how you'd make it work at scale. And then also working out what your process is around, well, how long would that retention stay? Who would sign it off at what point? So it's something it's something we have looked at. Probably we will look at again, but it's the mechanics of how we would make it work and agreeing who the parties are to sign off. It's sort of like a bit like linking to sort of a snagging report and a snagging list. It makes it difficult unless you get everybody in the industry signed up to who's going to look at it, when they're going to look at it, what the sign-off process is going to be, etc., etc.
It's a UK finance conversation as well, isn't it, Rob, in terms of bringing lenders on board all at the same time? I think that's definitely key, and there's a huge amount of work going on around the disclosure of incentives form. So they're looking at that, and there's lots of new build activity, lots of engagement in that space. So I think it's definitely going to be something on a list of we need to look at that, and we need to consider the implications, the benefits and the cons, etc.
I think it links into a broader piece, though, Ian, regarding some work we're doing at the moment around looking at warranty providers, what warranties give us, as well, because as I think was said, there's a piece here that you work on the basis that building reg sign off is taken at face value, and it's a question of, are all properties being looked at? Is it done on a risk-based assessment, etc.? So there's some things there we are looking at and talking to the warranty providers and those signing off building regs around what's actually being done on the ground. We are quite lucky and unique in the fact that within my team we have a number of chartered surveyors. So we do go out ourselves and inspect new build sites. And have a look at them. So that kind of means that we are a little bit closer to the ground on some of this stuff. Than some of the others.
And also on that latter part of that question, isn't it, Rob, in terms of the structural warranties are basically not paying out when people are claiming. We are, whilst we're not in a position to be able to say which ones are, we do have our finger on the pulse on this. We do an annual review of everybody that is on our structural warranty list. We get the policies, we talk to their underwriters, and if we get wind of anybody that is struggling to make a claim on behalf of a nationwide mortgage property, we're very, very happy to get our hands dirty.
Useful, thank you for that, Epi. That's a really interesting
and we
point.
Do
and we have
Good.
So,
Fantastic.
And just I think what's really important on the new build piece is we unfortunately are in a bit of a space where some consumers don't feel their voice is being heard in so many of this in kind of anecdotal stories about structural warranties not paying out, and that's why we're trying to be very on the pulse on this, so that we do take it really seriously, because fundamentally, as I said, as a mutual, these people really do deserve to get a voice when they don't feel like they are being listened to.
Yes, fantastic. Thank you for that. Another question about forfeitures. Are there more forfeitures that Nationwide are aware of due to service charges on leasehold? So again, just what are you seeing, and are there steps or measures that can be taken to ensure that there's less forfeiture? I mean, I hear about landlords forfeiting residential long leases and see it from time to time, but what's your perspective on how much of a problem is this?
Sorry, Rob, you go.
So I think there's a couple of points here. So firstly, we are seeing service charges increase. I think we've got to be cognizant of that fact. Now, some of that you could argue is down to inflation, cost of living, etc. I also think we are starting to see buildings being managed potentially in a slightly more proactive way. Where we always have this conversation internally when we're valuing and looking at properties around what's a good or bad service charge. And I always say to people that a low service charge is not necessarily a good thing.
Good one, I agree.
And a high service charge that's not obviously warranted is obviously always a bad thing. The challenge I always give is, what's a realistic service charge to maintain a building so it is done in a way that keeps it safe and secure for you to live in? And what we've seen is some jumps in some service charges where buildings obviously have not been maintained properly, and now the service charges are having to increase. From our perspective, we have seen some of those increases in service charges. So that's one point I just wanted to touch upon that we're aware of. Then moving on to the forfeiture perspective, what we tend to see is where forfeiture is potentially going to be an issue, we generally get approached by the freeholder or a representative of the freeholder in relation to the outstanding ground rent and service charges, and then potentially we will step in to prevent the forfeiture happening, obviously to protect the property that we have mortgaged. So are we seeing an increase in that? Yes, we probably are seeing a slight tick up in it, which means we're not actually seeing the forfeitures happen, but we are I guess, being involved in more cases where they have potential to happen. I suppose it's one of the key reasons why we always want to make sure there's that option for us to be made aware of the forfeiture, and not be in a situation where effectively the lease doesn't grant us the ability to step in and resolve the issue, because obviously from a security perspective, it doesn't help us at all if we're not aware of that situation. We don't get an opportunity to help rectify it and then speak to the customer and find out what's going on, because sometimes there's a dispute between the freeholder and the managing agent and the consumer. Sometimes the customers, their circumstances have changed, not able to pay. So we want to be able to look into that and act responsibly when we see that situation coming to fruition. Sorry, I don't know if you wanted to add anything onto that.
No, I was just going to say, I guess forfeiture is obviously not interesting, but for us in terms of policy and lending criteria, it is something that we draw upon quite heavily to be able to understand where our own lending, from a new mortgage perspective, will go. And it's absolutely right. We are seeing an uptick of the number of times that we are being asked to step in to help leaseholders, and that's undisputable. It isn't necessarily about building safety, though. I would say I definitely wouldn't say there's a direct correlation between the cases that we're getting involved in now and the BSA, the Building Safety Act. But what I would say is that we are starting to see some of the more toxic covenants in leaseholds contribute quite heavily to the number of forfeitures that we're seeing. So ground rent escalations going way out of control, and fundamentally people just not being able to afford those types of ground rent escalations. And what are they going to pay first? Are they going to pay their mortgage? Or are they going to pay their ground rent? And for people, most likely they're going to try and pay their mortgage first, because that's what they don't understand forfeiture. They don't understand what the risks are. So escalating ground rents and the service charge piece that Rob just described, that I won't go into again, but it's very much helping us understand the type of leaseholds that we need to be lending against, and also helping customers particularly leaseholders, get those terms either amended or varied to the point where they are not going to find themselves with a tripling ground rent every 5 years. Or I know that's an extreme circumstance, but there are those situations. So I think the forfeitures that we're getting through now are really helping us understand how we can help customers now move forward with their leaseholds, and obviously there's legislation that's kind of helping with new builds too. And the only other thing on the forfeiture piece is applying for relief as a lender is normally actually really quite difficult, because we won't know until the absolute last moment. There won't be one individual person in a lender that will know what to do, because there will just be a very vague letter sent by the courts to our head office. And so practically as lenders, and I think I probably can talk for most people in this in the lending community, is we need a really robust process to help. Because when you are talking to a large lender, there are hundreds of teams that letter can go to that might not necessarily know exactly where to go. So when we put a change in, whether that's the mortgagee protection clause or however that is, it's really there to try and make sure that we are in a position where we can help in a timely fashion, rather than miss that letter asking us if we want to apply for relief and then failing to do it in the last instance anyway. So I think, it's really useful when we talk to conveyancers just to remind everybody that we're quite a large machine. Every lender has, it's quite hard to be able to input small processes here and there. And forfeiture is one that, we are working with, but it's just something I thought I'd just clarify.
Good point, Epi. Yeah. From a training perspective, one of the things I say to conveyancers is, in the good old days, you might see forfeiture as a very interesting sort of academic concept, but not appreciating just how much of a sort of vicious remedy it can be as against leaseholders. So I remind practitioners all the time of explaining to clients, the leaseholder, your customer, a borrower, about just how, what forfeiture is and how draconian it can be. And the other thing, just following on from Rob's point there, I am seeing at the moment landlords who now can't charge a monetary ground rent with regard to new leases, charging a standing management charge as a service charge. So in other words, we're just translating ground rent into a standing management charge. Have you seen that, Epi? You seem to be nodding.
Yeah, absolutely. Without a shadow, in all fairness, probably very early into this process, we started to see people repurpose ground rents into other things. Just because they're not called ground rents don't mean that they're actually not in purpose. So we have some quite, and this is just talking from a nationwide perspective, that's not okay. Unless it's attributable to an actual service that is being provided, then, and fundamentally that's quantifiable. And to Rob's point, it doesn't mean that you should lower the service charge. It doesn't mean you should increase the service charge. The service charge should just simply be proportionate to the work that's required to the property and to manage that block sufficiently. So in anecdotally, those cases that I've seen where a management fee has been loaded on, they weren't able to explain what that management fee was for, and we've been able to get that removed. So, by essentially, the lender saying, no, that's not acceptable, and they were able to vary it. But that's not, again, it's another practice, isn't it, that we're having to be careful about, so that a new ground rent is just not simply repurposed into a management fee.
Absolutely.
So it's something we've seen.
Good. And the other thing that Rob was mentioning there, which I think is quite right, a high service charge where there is good management and good levels of service isn't a bad thing at all. And therefore, you do have to be careful. And equally, a low service charge may appear to be very attractive to the borrower client, the potential leaseholder, but again, it's a question, I think, of educating the client from a conveyancer's perspective about just what service charge is. And as you were touching on there, Epi, this idea about, at the end of the day, it's a provision of a service. And the service should be reasonable, should be at a reasonable cost, and the statutory protection sitting behind both of those concepts. But at the same time, it's important for a leaseholder to understand, the services that are specified in the lease would not normally enable the landlord to recover the cost of the provision of those services within service charge. So again, I think it starts with educating the client as to just what service charge is. And I always say to clients, and always say when I'm doing training, service charge is a contractual commitment on the part of the leaseholder borrower to pay unascertained and unascertainable future expense, with some statutory protection with regard to reasonableness under the 85 Act and some protection in certain circumstances generated by the Building Safety Act. But clients have to understand that and appreciate it. And I'm delighted to hear that you as a society are sort of standing up for the leaseholder with regard to some of the points that you made there, Epi. So that was really interesting. Some other questions that we've got.
Ian, sorry, just to butt in there, Ian. One other thing I think is really important in that conversation that people have around understanding, for me, is sinking funds and provisions into sinking funds. Because quite often we see that the consumer doesn't really understand, is there a sinking fund? And also potentially how that is I guess recuperated. So I saw a case the other day where it was reported to us regarding a high service charge. And that's all we were told. When we then looked into the lease ourselves, actually it was in relation to, well, once every 5 years there's an injection of cash into the sinking fund. So actually that wasn't the standard service charge. And it's that piece of sort of understanding to go, well, what pools of money are we playing with here? Where's it sat? And the difference also when you're looking to buy a property around, one with a sinking fund, you need to view completely differently to one with no sinking fund. Absolutely.
It's good point, Rob. And the other thing I always say is that from a conveyancing perspective, I'm unable to say whether a reserve fund is good, bad, or indifferent as to the amount that's in it. But the fact that it's there and the fact that the landlord is utilising it, I think, generally speaking, is a positive thing.
Well, if you're looking at different flats and you're comparing which one you want to buy as a purchaser, you have to kind of take that into consideration. That one that has a sinking fund means you're in a different situation to one that has none.
Yes, exactly. Yeah. Great
point. Along with understanding the general condition of the building as well, around when was the lift last replaced, when did the roof do? It's kind of it's kind of taking a step back and understanding that broader piece around, well, when are we likely to get Section 20 notice? What's being maintained? Where are we on the cycle of maintenance within this building?
Yeah, good point. Yes, good point. Epi, you're going to say something?
No, I was just going to say, because another comment in the chat that I think we could probably link into this conversation is around digitisation. And I'm assuming it's talk about the Home Buying and Selling Council, and how do we envisage this working when the packs are being put together by AI. I think I wanted to cover this today because I think it's a really important conversation that's kind of ever evolving. I'm going to touch back onto what I was describing earlier about the LLC process, around us as a lender being very steadfast in what we describe as being provenanced information. So I'm not going to touch on material information because that's a bit of a contentious topic. But what I'm going to say is if Nationwide obtains a piece of information at any stage in the process, we always look at the provenance. So if that provenance is an AI piece, an AI generated document, we will ask more questions about where that's coming from. Is it an open? We will look into that in more depth before we just take it as read. So whilst we are part of the APDA and the Home Buying and Selling Council and all those organisations that are really genuinely, I think, pushing in a direction for more information, we will not be putting fundamentally our money at risk on something that we cannot provenance or we cannot confirm where it came from. And that's a really key piece that underlines it's the thread of all information. It's got to be right. So whether it's coming from the land registry, that's a provenance piece of information. They're responsible, to your point there. They indemnify that information if they get it wrong. That's the level of accuracy and data sourcing that we apply to as much as we physically can on all facets of information.
Yeah, got it. Thank you. There's just in the chat as well. Harriet's just put something in there. I don't know if you can see it, Rob.
Just read it.
But perhaps could you have a look at that one for a moment or two?
Yeah, no, that's fine. So this one was one we got heavily challenged on a couple of weeks ago, particularly around the planning permission piece. So we get, just for some context, we get thousands of queries in, whether that's monthly, yearly, around breach of covenant, restrict covenant. We ask the same 8-9 questions every single time we get a query in from a solicitor. We published those questions to enable, I guess, to resolving that back and forth initially as to, I've got a restricted covenant, what do you want me to do? Well, we'll send you the 9 questions, you come back to us with the answers, and then we move on. The idea was if we publish those 9 questions, you'll be able to come to us in the first instance with the information that we need to answer that question, which is touching on what Rob and I were talking about earlier. That information is only required where the conveyancer in their professional judgment feels that we need to know about it, which I understand is a contentious topic, because if you speak to one conveyancer, they'll believe that we do need to know, and when we speak to another conveyancer, they'll believe we don't need to know. But what we're doing is, if you are going to refer it into us, please answer these 9 questions. It might be 7 or 9. Forgive me if I'm wrong. But then come back with this information, and you'll get a quicker response from us. You'll get a more detailed response and a more comprehensive response. We're not using the handbook to define what professional judgment is in the conveyancing world. If you are
just to cut in there, I think the question here is in relation to planning.
Can I? On your point though, how you raised a really interesting point on restricted covenants. This 7 or 8, 9 point sort of checklist that you mentioned. Whereabouts can practitioners locate that? Is it somewhere on your website, or is it
in our handbook?
Right, a handbook, lovely. Thank you. That's great. As we were just mentioning there, I think the question was looking at planning. Can you take that question, Rob, or the question that we had a little earlier?
I was going to let Epi just finish because she was covering the topic.
Sorry.
I guess it's both, because we see an awful lot of customers that come to us with a extension, for argument's sake, or cavity wall installation. I think that breaches a covenant, and then we get asked the question as to, here's an indemnity, can you please accept this? So I think to answer, we tend to talk about an enforcement period or health and safety. So if you have, I'm just touching on what Harriet said, I know Jane's put around neighbourhood changes a little bit further on down, but if we're just touching on that, if there is no building control completion certificate for works carried out over 25 years ago, that's outside of what we would define as being normal enforcement period. The only thing that we would care about is if it was about health and safety. So if you've got a loft conversion that people are putting their children up in that doesn't have the right consents, but it was done 10 years ago, for argument's sake, then we probably would want to know about that, because we want to send our valuer out. and we want to speak to our valuer about it. If it is around cavity wall insulation 15 years ago, then no, we don't want to know necessarily about that. But it's about, again, touching on the part two piece. It's very difficult for us to publish those scenario-driven examples in our part two because we are word count limited, and we're also trying to give you a huge amount of information in quite a small box. That, however, is something that I know all lenders are looking to do in the new part twos for the handbooks when UK Finance are going to release the new handbook. So we'll be able to put documents in there, etc., and then there we can expand more on these types of things to give you some more, I guess, insight into our risk appetite. But to be clear, I think they kind of link into each other in terms of when you have a breach of anything, whether that is potential breach of planning, potential breach, or just not getting building reg sign off. We will try and help conveyancers by telling them what we need to know before we make any changes, if that makes sense, so that we don't end up with this back and forth. And also in the longer term, considering this is kind of on the note of indemnities as well, where we just simply won't accept an indemnity. So you don't need to write into us, or where we will, but there's going to be certain things in indemnity that we want to know.
Got you. Thank you for that. Now then, there's a message from Gwen. In terms of CML handbook on 5.15.2, what circumstances will Nationwide insist deed of variation and will not accept an indemnity policy? Well, again, I guess that is going to be a long response, isn't it? So any sort of quick comment from either of you on that point from Gwen?
I'm going to have to cast my mind back on the section now, but is this around defective leases?
I'm assuming it is, yes. I think it is.
Yeah. So I don't know what part of the defective lease section that's Gwen is specifically asking about.
Yeah, it depends on the defect, doesn't it?
Basing on what we've chat's gone wild now.
Yeah, it has. Yes, it always does. We get towards the end of these presentations, we get loads and loads of questions. So I tell you what we'll do. Let's skip that one, and let's have a look at
estate rent charge and freehold management. So this is the section 121 piece, isn't it?
Yeah. Okay. Practitioners are all terrified about estate rent charges, to be honest, Epi, and it really is a nightmare on the basis that, just what is an estate rent charge? The number of arguments I have where, even though something isn't called an estate rent charge, the fact is it's a legal interest that's being protected and is, although not called an estate rent charge, that's what it is. Anyway, over to you. Sorry.
I'm not quite sure what the question from Gwen is in terms of are you sure? Are you not happy with that policy, or
I think
there's a lot of stuff going on now?
I think what she's saying is, when would you insist on a deed of variation? When won't you accept an indemnity policy? Well, my guess is, as far as indemnity policies are concerned, that might be a question for Robert and the team at Stewart Title to answer. And as far as deeds of variation are concerned, well, it depends. I look at estate rent charges and say this, as from a lending perspective, and indeed from the borrower's perspective, anything that excludes the ability of a rent charge owner to utilise section 121 and the sort of fictitious lease concept has to be sensible. Okay, and anything that enables the rent charge owner to use a section 121 lease as a method of enforcement is bad news. I like to see provision that says the estate rent charge has to be reasonable. I like to see provision that says in the event of dispute, ADR has to be used. I like to see provision that says in the event of any enforcement being taken by the rent charge owner against the rent charge payer, the formal notice and formal demand has to be provided. In an ideal world, where any form of enforcement action is being taken, formal notice given to lender as well. That's my view and always has been. Again, any comment either of you on that?
So in our part two, we go into detail on this particular topic about non-regulated and regulated rent charges, which is what the recent change in I would say over a year ago probably, change in legislation kind of went into detail to. I can't comment on what a conveyancer will define as a rent charge and which they won't, because I think that's overstepping the mark as a lender. And I think if we did decide to put that into our handbook, we'd be told that we're doing the conveyancer's job. So I think we'd steer clear of that. But I mean, I'm very happy to have a conversation, but I'm not quite sure what the ask is of us, really, because we've broken it down into where we would and where we wouldn't. If the question is, would we accept an indemnity policy and why wouldn't we? The simple answer is because we've done quite a lot of work in this space to understand what the policies actually do and don't cover, and where we have decided not to accept indemnities, that's born of the fact that either we've actually not been able to claim against one where we want to, or we aren't happy with the terms of the standard indemnity insurance in this space. So we've decided that actually you need to vary the terms or go down a different route. I'd probably just say that's a lending decision. I wouldn't necessarily say that's a legal one. That's just our risk appetite in that space.
Yeah, thank you. And then
I was just going to hum in on this last one. Sorry, in relation to the estate rent charges being lower than they should be. If people have got evidence or examples of that, if they can send them in, either via you, Ian, or Robert, or anyone, then we would be very keen to look at those.
Thank you. That's fantastic. Donna asks, Robert and Epi, some lenders publish conveyancing guidance on their website. What do you think on that? So it's a lot of work, I guess.
Well, no. So we already have, for example, our low-cost home ownership guide, which is on our website. One of the big challenges we were facing on that is in relation to the fact that lots of people weren't reading it. So we do link to it. So it's a question of making sure, if we were to put stuff on there, how do we ensure that people go and look at it and alongside the handbook, because it becomes, I guess, a supplementary element. Because we've had the low cost home ownership piece on our website at least 15 years. And to say the number of times when we then refer to people go, I wasn't aware of that. So it's in our guide for lawyers page on our co.uk website.
Thank you. Good. Question from Christopher Wright. Hi, Christopher, by the way. On indemnity policies, handbook identifies whether you'll accept indemnities for you, then still need to see them, or is it just special risks? So I think what Christopher's saying is, do you actually need to see the policy, or do you just need to see if if there's anything unusual in the policy? I think that's what Christopher's alluding to.
Yes. So I'd probably just start by saying we are aware that there's a disparity between what we describe as part 1 of our UK Finance Lenders Handbook and sometimes our part 2s. I think that's not just about indemnities, that's just generally, which is obviously why there's a need to refresh the handbook. So I think there's just a piece there that we know we're working through and will resolve in due course. At the moment, we are asking for most indemnities to be sent through to us. That's defined in each different part 2 as to where we do and don't want them sent over to us. And the reason that we're asking is because, as I kind of alluded to earlier, we have seen some concerns with some of the indemnities that we've seen taken out in either our name or our customers' names. So we're just looking to be able to provide some more robust guidance, I guess, to conveyancers, as to say, actually, you can take out indemnity, but you need to take out an indemnity with X, Y, and Z being covered within the policy, or you need to make sure this isn't included or this is included, etc. So I think at the moment we're just in a bit of information, like a discovery phase, as to how we move forward with these in the future.
All right, got you. Thank you, Ellie. And then finally, I think, because I'm conscious of time, a question in the chat from Laura Madden. Recently reported restricted covenant answer the question in the handbook, seeing they've hit a block because we're unable to specifically confirm what enforcement action will be taken in the future, which we can't predict, despite the fact we're taking out a policy. Low loan to value case, but looks as if the decision has been made not to lend, partly due to breach being 4 years ago. Is there a certain time limit you use as a guide so we know for future whether insurance not accepted as a remedy? My guess is there won't be a sort of certain time limit. It'll be looking at all the circumstances. But if you could help on that, that would be brilliant. Either of you?
So I had one the other day that was a breach of restricted covenant for they built an extension and they weren't allowed to build an extension. And they built an extension, I think it was 15 years ago. And the covenant dated back to 86, I think it was, just to give some context there. The covenant holder is still an active company that is registered at the next door address, and in that situation there is an active beneficiary of that covenant holder, they have breached and there's no consent. Now, a lot of people then argued, oh, well, they're next door, so they knew the moment that they did the extension. But unless anyone can confirm in writing that they've got that, that they have that authority and consent from them, it's quite a difficult situation for us as a lender, because how do we value that property? Do we value that property without the kitchen? Because there's a huge great extension with a kitchen in it. And so whilst that was done 15 years ago and the covenant dates back to 86, that's very much what we describe as a live case, really, in terms of it's quite plausible. However, if you cannot locate the covenant holder and the covenant dates back to the 50s and it was done 20 years ago and blah, 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 that's then a lower risk to us as a lender because nobody knows even who to go to a consent. So it's very difficult is the quick answer to that. But they're the types of conversations that we have internally when we look at when we get a referral through from a conveyancer and it's got a whole host of information on, we can then come back to you with, actually, we don't believe this to be a risk to us, and you go ahead. The problem is how do we get that information over to you on a scenario by scenario situation of where we do want to lend and when we don't want to lend. And that is something that I know as a lender we can improve upon. We're working on it. You might just have to bear with us while we work at the best way.
We try and take a pragmatic approach, and again, as Epi said, as a mutual, it's not necessarily just about loan to value. It's about us understanding the whole piece and the impact, and also sometimes does the customer know and understand the ramifications.
Yes. Brilliant. Well, look, I'm conscious of time. I know there are some questions that we haven't been able to answer due to lack of time, but all I'd like to say is, Robert and Epi, thank you so much for giving up your time this afternoon. If I may, I will sort of try and extract some of the points from these questions, and if I may, email them across to you. And rather than people bombard you, I'm happy to act as a sort of conduit between the two and to furnish you any questions or queries we've got flowing on from today. Davina asks, will a copy of today's recording be available and circulate to everyone? Yes, we'll deal with all of that. Hugo and indeed others saying thanks, Ian, and Nationwide, of course, very helpful. It has been absolutely brilliant. Two important things. One, massive thank you to Stewart Title, our sponsors, for organising today's event. Epi and Robert, thank you so much for your giving up your time and sharing with us lots of your expertise, guidance and assistance. I think it's been really useful. I may ask you at some point, and you'll no doubt wish to dodge any email from me, but I may ask you at some point in the future if you'd like to come along again, because I think it's been really, really useful for attendees.
I think from my perspective, Ian, Epi mentioned this, the more communication, the better. Ultimately, we want to remove any myths and any issues, and we're open to feedback conversations around how we can all work better together. This is a partnership. As we say, as we head into this stamp duty period, especially, all of us have got the same outcome. We all want to achieve the right thing. So this is if we don't work together, we don't get there. So this is about it's about all of that. So we'll be more than happy to come back in the future.
Fantastic. Time doesn't permit me, but I'll just show you on the slide one or two things just to finish. Contact details for Stewart Title on there and on there. Useful websites you can have a look at. You'll get a copy of the recording and the slides. There were two topics I wanted to talk about. This case of Van Zillen, Walker and Smith concerning boundaries and leases, which is really interesting. And of course, the Supreme Court decision in Brown and Ridley. I'm going to hold those over to the next forum, but thank you so much to everyone attending today. Robert and Epi, once again, thank you. Robert Kelly and the team at Student Title, thanks everyone. Stay safe, speak soon. And again, a massive thank you to the Nationwide Building Society for this afternoon. Thanks everyone. Take care. Bye-bye.
Thank you.
Bye-bye.
Cheers. Thanks. Bye.
Thanks, Epi. Thanks, Robert. Bye-bye.